Welcome to another edition of Lockin' It In with Deb and Pear. I'm Deb.
I'm Pear.
And today we're bringing you the real estate report for the week ending August 14th, 2021. If you're a renter and you want to buy your first home, the Federal Housing Finance Agency, which is called FHFA, has just made a huge change. If you don't own a home right now, this is very good news.
By the way, the FHFA right now governs conventional loans and FHA loans, which is the majority of loans. What they have done is they have emphasized and started counting rental payments by renters as part of your credit score and part of your analysis to get a home. Now, recently, I pulled credit on an individual wanting to purchase a home, and his rental history was the first item on the credit report after the credit score. I've never seen that before, but that is coming, and it's actually taking effect now.
Yeah.
In terms of paperwork, it does mean that some borrowers are going to have to provide 12 months bank statements to show that they made their rent payment.
Yeah. I think the big deal here is most people's rent is not reported to the credit bureau.
It's not. That was the first
Rent's
time.
never reported.
That was the first time that I've seen it reported on the credit report.
Yeah. It's about 5% of rent that actually goes on the credit report, which means that, the bank statements will help you, although they don't say when the rent was due or that it was on time.
But if you have regular rent payments, towards
regular
the beginning of the
frequency,
month, towards the beginning of the month probably, for 12 months, then you're in.
Yeah. As long as your rent is at least $300 and you need to live in the home that you buy. It only qualifies for a primary residence and a first-time home buyer. And even if you're late, you show like one rental late or two, then that will still help you.
A strong history helps.
A
perfect history is really helpful. According to the statistics in some of the articles that we read, I think it was 17% of borrowers that got turned down that did not have the rental history count would have been approved and would have been able to buy a home.
17%. That's huge.
That's very big.
Extremely significant.
It's huge.
Yeah. So I think that's awesome. So if you tried to get a home and your credit score was too low and you pay your rent on time, I would suggest you talk to parent or your own loan officer and see what your situation is now.
Yeah.
Your credit might get better.
And your credit score will automatically go way up because that is, for most people, their largest payment they make each month.
Now, what happens when you do this? Do they report your rent to the credit bureau during this process?
I'm not sure how they're doing it, but I know that in that one case that I pulled credit about a week ago or 2 weeks ago on that borrower, it was on the credit report, and I was wondering what it was, and I asked him about it, and he said, "Oh, that's my rent." And so,
that's highly unusual and awesome if your landlord does that. Maybe that's something to ask your landlord about doing.
By the way, he didn't have very many accounts. He had like one other credit card, and his credit score was above 700, and he qualified, and it really helped him.
I was really surprised that they weren't already considering rent in some sort of a revised credit score.
Some lenders do.
Because it seems significant.
But they don't include it in the credit score, and they don't include it to the extent that Fannie Mae and FHFA are going to count it. They don't. It's taking more priority, and it should. You're replacing your rent payment with your mortgage payment.
Yeah, exactly.
It's the most important
Obviously,
thing.
if you can pay your rent every month, then your mortgage is going to be about the same or less. You can pay your mortgage. Credit score doesn't matter.
Yeah.
In this case, it doesn't. Because,
Well, it does, but not as much.
You know,
the most important thing
right.
is the rental history. It really is the most important factor.
It's the biggest payment you have. If you can pay that, you're doing all right. And
yeah, and
it will count against you as far as monthly outgo because your rent will continue to go up, maybe outpacing your income.
And you think about it. I mean, someone that owns a house that's buying another house, selling their house, buying a new house, their mortgage payment counts. So the rent payment should count too. It just makes total sense.
Yeah, I love this. And I'm a little bit annoyed that we weren't already doing that because this just sounds so unfair in the situation where we're trying to encourage home ownership. And in this case, I think they're trying to, in particular, address people of color who apparently don't have as much generational wealth, which kind of sounds like a strange reason because I don't have any generational wealth either.
Most people don't.
Am I black? Oh, Rocket Mortgage, my favorite company. Not. When I did business with Rocket Mortgage, the loan officer changed on me every other day. Every time I wanted to call him, it was somebody else. And when the transaction was over for months and months and months and months and months, they kept spamming me with phone calls, asking me for survey after survey after survey after every level, at every level of the company. And they did not serve my client well, and my client didn't appreciate the loan officer changing all the time either.
Yeah, big companies like that sometimes can be a hindrance. I recently got a loan because another company, not Rocket, not as big as Rocket, but a big company kept changing loan officers on him, and they kept asking him for property taxes, for pay stubs, and his wife, and they didn't understand the fact that his wife only got paid once a month, and it was just a nightmare.
Yeah,
with that big company.
Now imagine doing business like this to sell your house. Imagine selling your house this way. Let's say the Rocket Mortgage, they plan to be the one-stop shop for selling homes. Essentially, they would be your lender, your realtor, and they're based in Detroit, so you would not physically see your real estate agent. They would list your home, arrange for the photographer, list it on the MLS, and do all the paperwork, which is the easy stuff. Selling the home, when you go out and you show the buyer, your boots are on the ground, that is where the real hard work comes in. You still have to do all the paperwork that the list agent does. Plus, you have to spend time and money showing homes. It costs money just to stay in this business for licensing fees and brokerage fees. Our commission is set for a reason. It's traditional that the selling agent gets about 2 to 3%, 2.5 to 3% usually, and the list agent will get 2.5%.
Because hopefully the seller has equity and he can afford it more than the buyer who has to pay cash for everything.
Yeah.
From closing costs to
right
to down payment to everything else.
And well, here's the thing, and this troubles me. Rocket Mortgage would charge 1.5% to list the property, and they would pay 1.5% to the selling agent, the agent that has the boots on the ground. The problem with this, firstly, as a licensed real estate agent, I have a limited license to practice law. That comes with a huge responsibility and a huge liability, and to cheapen my industry like this by making it so impersonal and taking away my right to negotiate my commission. If you pay me 1.5% for selling a house, there are often times I might have to now go and get it from the buyer because I can't afford to sell this house. I will take a loss because my commission won't be high enough to recover my fees.
For a low sale price house, that's the problem that we run into.
Yeah.
For $1 million house, 1.5% would be more than more. I mean, it would be.
No, when you sell $1 million home, you're not getting as high of a percent. You're not getting
a lot to market too.
Yeah, but usually the percentage isn't 3% on some of those homes.
Exactly.
It might be lower. But yeah, because you're already getting a huge payoff. But in order to sell a house, I need to have gas in my car. I need to spend hours on the road. So much work. I need to make a ton of offers before I finally find that house that's going to get me 1.5% commission. It hardly makes it worth it. Given all the time that I would spend with the buyer, I would be making $15 an hour potentially on an average transaction, for all I know. It depends
on the sale
the
price.
market and the sale price. I help a lot of first-time home buyers, and this is why this is a particular issue for me. But mostly, I feel like this cheapens our industry a lot. It will take a lot of respect away from the hard work we do in the field and the personal touch. They plan to have their own agents as well, similar to Redfin, and also they will be earning less money, but I hope that Rocket Mortgage is paying all of their brokerage fees and the gas money and all of that. Otherwise, I don't
They're
know.
not. They're not.
Yeah.
They want to become. They want to monopolize the market. There's a couple companies out that are trying to do that.
Yeah.
And they're trying to cut out traditional loan officers and realtors.
Yeah. And basically controlling the process all the way through closing. And I imagine this will involve escrow as well. And they'll have inspectors that they have on their list. And they'll be going by these lists of their partners. And I don't like this at all.
Well, they're running into some trouble doing that or doing things that are similar to that.
Regulatory issues or...
Regulatory issues. Traditionally, you cannot bribe or... What's the word?
So we can't give each other kickbacks for
Kickbacks.
referrals, a loan officer and a realtor. But in this case, it's not really a kickback. What it is it's a referral list, I think. But it's still highly questionable because you are giving them a direct list and you're only using... if you're the one, the listing agent, you're the one picking the inspector and the photographer, and you're going to always pick the same one. And when you work for a really big company like that, your own partners are the ones that are going to be the ones getting all of the business. I don't think it's going to affect anything in the short term. This won't even start until fourth quarter. Since we already have Redfin and other companies trying to do similar models.
Well, they're just trying to monopolize the whole process.
The home prices now, the way they are, it factors in the traditional real estate market, the higher commissions, the seller paid commission, seller paid closing costs. All of these things factor into the average price of a home. And if you change that model, then some houses start selling cheaper, and maybe some houses the buyer can't buy because the buyer can't afford commission.
It's a doubling of the outpour of what the buyer would have to pay. I think it's too much already as it is for the buyer to pay.
It is ridiculous how much closing costs are. I think that is a scam. It's all money that's being made.
Well, this would make it twice as bad. This would make it worse than it is.
Yeah, you're not going to get your $200,000 house unless you have a lot of money saved for a real estate agent, right?
I'm not even seeing very many $200,000.
Yeah, okay, 250 even.
I'm seeing single wides under 200,000.
If I show you houses, if I show you 20 houses in that price range, I have spent a ton of time already, and I've already earned my 1.5% before I even make a sale. I've already used up that money helping my clients when they're a buyer, because it takes a lot of time and a lot of energy, and all of this I'm doing for free. It's all for free. I can't sell houses at 1.5% commission. Not unless I'm a big company like Rocket Mortgage. Mostly I don't want real estate to become a factory.
That's what they are. They're a factory. They are right now.
It's a big factory.
They're a loan factory right now, and they want to become a loan and real estate factory.
Yeah.
That's what they are. And there's a few companies like them that are Zillow and some of the others.
And I think this will ruin real estate if it continues. People devalue. They think so many sellers don't want to pay commission. They want all of that equity that they didn't do anything to get. And they don't want to part with any of it. You know, you got $100,000 in equity on a home that you just gained $80,000 in equity on that you didn't pay into. And sellers generally don't want to pay a dime of it, even though, as I said, it's all money they didn't even pay. So it doesn't hurt the seller at all, but the buyer's paying extra high rents and has to save money at the same time. It doesn't make sense to treat the market this way. Okay, this is like the Walmart of houses, of real estate. I don't care to shop at Walmart for my essentials
Dream
of
home.
living. Yeah.
Your dream home.
Find your
Shop
dream
the-
home at Walmart.
Yeah. That about it? I think that's about it.
That's about it. Just one more reminder about this 12-month, the rental history for getting a home, qualifying for a mortgage and increasing your credit score. If you've tried to do this before and your credit score wasn't high enough, try again. It might work now.
Yeah, if you're close, it will work.
Yeah, and rates went up a teeny bit last week. You know, they change from week to week. It's still a good time to be thinking about remodeling your home or refinancing your home, given that while we still have these good interest rates. And with that, this has been another episode of Locking It In with Deb and Pear. We'll see you all next week.
Thank you.